How does a brand end up off the franchise directory? What did they do wrong, or what did they not do right, or who falls off?
If they made a change to their FTE or their franchise agreement that now makes them not eligible, then SBA can remove them. Or if something is determined during for example, SBA guarantee request by a bank of a loan that's defaulted, and they find something that determines that they're ineligible, they can remove it.
Welcome to the Franchise Hot Seat Podcast, where we talk about all things franchising. Now, here's your host, Dr. John P. Hayes.
Hi, John Hayes with Franchise Hot Seat, and my guest today is Shay Kleinschmidt. She's the Vice President of Funding at Fran Fund, based in Fort Worth, Texas, but operating all over the country. Shay, thank you for joining me.
Thanks for having me.
Yeah. So, how long you been the Vice President of Funding at? You've been there a long time at Fran Fund.
Been at Fran Fund for about 13 years.
Okay, and over that 13-year period of time, franchising, has it bigger, better, worse, more interesting, more exciting, more opportunities? How do you describe it?
I think always exciting. At times can be challenging, but I think that's what makes it interesting and keeps me on my toes and very engaged. Definitely bigger. I mean, we continue to see growth in the franchise space. Lots of exciting changes. I mean, even just how technology has affected franchising over the past few years.
Mm-hmm. And so with technology, how does that impact lending?
Great question. So on the lending side, I mean, even Fran Fund, we have incorporated AI and automations in our CRM that we use to make us efficient and have all of our processes run very well and be optimized. And we even have like a lender match system, for example, that takes a client profile, matches it with each lender profile, and gives us what lenders fit that client's loan request best. And that's part of our system. So just seem like, trying to stay on top of it all. AI is a really big topic, and there's so much to learn about it. But just trying to stay ahead, implement as much as we can in a very smart way.
So when people call you, and assuming that they get to you, that there aren't too many layers between them and their phone call and you, but when they do get to you, what do they want to do? They want to buy a franchise and they need money. So how do you help? What do you want to know? And where do you start?
Yeah, great question. So I think it's really important to start the funding conversation as early as possible prior to being locked into any agreements, to make sure that you have a sound funding strategy in place to get not just the first unit you're looking at, but if you are looking at multiple units, how are you going to get all those open in a long-term strategy? So at Fran Fund, we really work to provide a customized short and long-term funding strategy to really set up franchisees for success. So once we get somebody into the lending doors, we use the information that we collect from them to educate them on what's the best lending product based on this information, what's the timing, what's the process, and then we ultimately pre-qualify them. And then once they engage our services, we help connect them with lenders, work through all the documentation, and we're there to assist all the way up until the loan is successfully closed.
So is there a minimum that you loan, and is there a maximum that you loan?
Our minimum is $100,000 on the lending side, and this is because most lenders don't play in the space that's smaller than that. It takes the same amount of time to complete a $100,000 loan as it does a $5 million loan. Our most popular product, because we do help assist a lot of startup franchisees, is the SBA 7A program. That does have a max cap of $5 million as the loan amount.
Is it very often that people call you and say, I need more than $5 million?
No. And I think that's we're referral based. And I think that's just the types of leads that we get are typically smaller than that.
Yeah.
Modest loan.
And people don't always understand about franchising that it doesn't take $1 million to buy a franchise. How often are you doing loans that are in the $100,000 to $500,000 range?
A lot. Our average loan size of all the loans that we've done year to date this year is about $600,000, but we play a lot in the SBA 7A small loan space, which is loans $350,000 or less.
Okay.
We do a lot of that.
And other than SBA, how popular, for example, is the rollover program? And if it is popular, tell us more about that.
Very popular. Lending, we have seen more people utilize debt lately, but the rollover is still a very popular product. And it's essentially a way for a business owner to use their retirement funds, like a 401k, to fund their new business without paying early withdrawal penalties and taxes. And it can also be used for the down payment on an SBA loan if they choose to do both.
So a lot of people will say, no, you never touch your 401k. That's your safety net. That's your retirement. What do you say about that?
The ROBS is a great program because you're ultimately investing in yourself. And so, the way it kind of works is you establish a C corporation that's going to be the operating entity. Then you create a new retirement plan. You then roll that current IRA or other retirement funds into the new plan that's tax deferred and penalty free. And then once those funds are in place, you're the trustee of that new plan and you can direct how those funds are invested. So ultimately that C Corp now has the capital available to invest in a new or existing business or franchise.
Yeah. Okay, good. So you've got SBA lending that's available to people, the rollover that's available. Are there other forms of lending that people need to know about?
Absolutely. There is the, traditional non-SBA route, so more of a conventional product. Typically that's reserved for more established business owners with 3 or more units, but that's an option. For startups, you could also look at unsecured term loans, which are essentially like a personal loan. To apply, it's focused on your credit and you typically need to have outside income. Those usually range up to $500,000 and each person can apply for one. They do come with higher rates though, and usually shorter terms than an SBA product. And then also a home equity loan or line of credit. If you have great equity in your home or real estate properties, that could be a solution. And then also asset-based lending. So if you have, for example, a high amount of marketable securities, a lender could take a line against those.
Okay. And is SBA the most popular that you work with for people who want to invest in a franchise?
Yes. For startup franchisees, I would say it's the most popular product.
And yet seems like they're always complaining about SBA takes too long. SBA's too complicated. SBA wants too much information. What do you say about that? You work with SBA all the time.
It is complicated. I mean, there's a lot of documentation that goes into an SBA loan. So it's really just making sure that you understand how to put together and present a business plan, your cash flow projections. So really working to understand the brand inside out and how you will be a good business owner following that proven model of success. And I just want to add too that, the timing of an SBA loan, you hear people say all the time, oh my gosh, it takes forever. Like, don't do an SBA loan. But really, as long as you are paying attention to what the requirements are, following the instructions that the lender is giving you, if you're checking the boxes, it can be a pretty quick process. So our time clock, for example, starts ticking once the loan package is complete. So then it's sent for lender review to the loan closing. For a service-based business that typically doesn't have any construction and it's more so operating out of a small office or your home, you're looking at 30 to 60 days. For a brick and mortar, because you do have potentially a lease involved or you're purchasing the building, construction, that's going to usually take longer because you have more third parties involved and more documentation. That's typically about 60 to 120 days.
Okay. And even that doesn't seem unreasonable for getting yourself into a business. But what a lot of people are worried about or are fearful of is, well, I don't really know how to do cash flow. I don't really know how to do a business plan. Do I have to have all that ready, maybe working with my accountant before I even call you?
To call Fran Fund, no. In fact, that's part of our service. So we not only help on the front end with pre-qualifying and walking you through what to expect, but then once our services are engaged, then we help with all that documentation. We provide templates that are very user-friendly, very easy, but then in addition to that, very hands-on guidance. So we can do a share screen, we can be on the call while you fill it out. We can't do the documents for you. I think sometimes that is a misunderstanding of a company like Fran Fund, and the reason why is because we want to set them up for success. So when they are going through a bank's official credit approval process, that credit underwriter will typically pick up the phone and call the borrower, and they'll do an interview process. And they'll, for example, open up the business plan or the cash flow projections, and they will say, hey, why did you put this in for your total sales? How did you get that figure? Or, hey, I was reading your business plan. What made you interested in this concept? And if they just say, oh, I don't know, someone else did it for me,
Right.
that does not make the lender feel comfortable that you are going to successfully operate that.
Now, what's my chance if I'm talking to the lender that you would be on the call with me? Does that happen?
We can if they would like us to be, but we typically aren't on it because that is, at that point, the bank really trying to ensure that the potential borrower understands business inside and out. However, we do prep them and advise them on what to expect and make sure that they're educated through every stage of our process. So by the time they get there, they're fully equipped with the tools and information they need to successfully.
Good. Because that again, another fear is the lender's going to ask me a question. I won't know what she's talking about, and I'm going to blow the deal. Does it happen that way? Or
no, we typically don't see a loan decline, at least on our end, due to a client answering a question incorrectly. I think the worst answer that a client can give is, I don't know. But they're not trying to trip up the potential borrower. They're asking questions that the client should know from the documents they completed and filled out. So it's just kind of verifying some things and then just also verifying their understanding.
Okay. And I think people also don't understand the SBA, the United States government, does not give us the money or the loans, probably coming from, let's say, Bank of America. So the person who's calling me to talk about my loan is not somebody in Washington, D.C. at the SBA, correct?
The only program that the SBA directly funds that you would have to directly apply to is the disaster relief program. So if you remember, for example, during COVID, the EIDL or economic injury disaster loans, they're what SBA is. But otherwise, for the 7A program, for example, the SBA acts almost like an insurance policy for lenders. So they provide a percentage of the loan amount as a guarantee to lenders to help kind of reduce some of the risk and really entice them to continue or start lending to small businesses.
Mm-hmm. And are some lenders have to be better than others? You might not want to say who's not better, and I don't want you to, but Bank of America, big lender for franchising, and who else?
SBA actually has a public list that you can find online. It's called the SBA Top 100 Most Active SBA Lenders, and it ranks them based on the approved loan volume amount and how many loans that they have approved so far the fiscal year of SBA.
Okay. So before I call you, I don't have to have a lender in mind. I don't have to have a relationship with my local bank.
No. Fran Fund has a very vast lender portfolio. We have hundreds of lenders. So in that lender match automation that I mentioned earlier, it is pulling from that very large portfolio. So our clients are typically getting multiple lender proposals to compare so that we can have competitive term sheets for them to look at and they have choices.
And then what's this going to cost me? If I call Fran Fund, what kind of a fee am I looking at for Fran Fund? And then also, how expensive is borrowing money today?
Great question. So our pre-qualification process is completely free to be pre-qualified and receive a Fran Fund pre-approval letter. And then for the remainder of our services, we charge a fee typically up to $2,500. We will refund $2,000 of that fee if we're unsuccessful in getting a lender proposal.
Okay. And then bank fees or?
Yeah, so the total cost for an SBA loan, for example, so I would say typically it's about 3 to 4% of the loan amount is what your closing cost and fees are going to.
Okay. So if I'm going to borrow $250,000, I would take 3 to 4% to know that's what I'm looking at. And do they take those closing costs out of the loan so I don't have to write a check personally?
Yes, typically the main upfront fee that they're going to incur out of their pocket is going to be what's called a bank packaging fee. So that's the bank's fee for the, due diligence that they're doing. They have to repackage certain things for their underwriter, and then they also control the whole closing process after approval. But then your closing costs cost can be typically amortized into the loan amount. So it's paid out of the loan proceeds and then amortized into your monthly payment over the 10 to 25-year term.
So to get let's say $250,000 loan, how much am I actually going to be out of pocket that would come out of my checking account by the time I have the loan in place?
So the down payment on an SBA loan right now for a startup is typically about 20% of the total project cost. And then the lender's coming in with the remaining 80%. It can be lower, it can be higher, depending on the overall strength of the loan request. And SBA did just incorporate back in their rule that on a startup, the minimum equity injection has to be at least 10% of the total project cost. And so the range we give is usually 10 to 30% of what someone can expect to put as their down payment on an SBA loan.
Okay. And is that fairly standard, and has it been that way for years, or has it changed in recent years?
It changed recently on the 10% minimum rule. However, that was a rule in place prior to the Biden administration, so it's just been brought back.
Okay. And then what am I looking at in terms of interest, and why will it vary, and how does it vary, and what do I need to know about that as a buyer?
SBA loans are based on the Wall Street Journal prime rate, which does fluctuate with the Fed rate. So it typically is variable, but then the bank comes in with their bank rate, which is fixed for the life of the loan. We usually see that range from 2 to 2.75% for most startups. So right now, prime is 7.5. So you're looking at an overall rate of about 10.25.
Okay. High? That's a high amount?
That's the highest. Yeah, that's at the flat end of the
Yeah.
range. Now, lenders can come in higher. Sometimes they may come in at 3%. The majority of our lenders, though, for example, they won't go higher than that.
Okay.
So it depends on your lender.
So is this an expensive time to be buying a franchise currently? We've had better years. We've had better rates. Would I be better off holding off midterm elections or whatever it might be? How do you advise people who are wondering, is this the time to get an SBA loan?
I think it's a great time to get an SBA loan. We're not in a rising rate environment currently. But even if we were, when you break it down into the math, if let's say we have a $250,000 loan and the interest rate goes up 0.25%, your monthly payments are only increasing about $25 a payment. And I kind of want to compare it to having children, right? Is there ever a really perfect time to have kids? If you are passionate and wanting to open a franchise business, then you should pursue a franchise business. But in regards to SBA loans, I think it's a great environment right now. We are having an amazing year. Last year was the same. There's a lot of opportunity currently and a great time to utilize debt.
Mm-hmm. So a lot of people are concerned about the economy because talk about tariffs and the downsizing of the government. Some things seem to be more positive than others. And so there's always that person or that sentiment that, well, you really ought to hold off until whatever is going to happen. The moon crosses a new path. How often is that impacting people? As you say, it's a great time to get an SBA loan. And so talk more about that, the fear that people have about the timing.
We have seen this year, and at other franchise conferences and even talking to other suppliers, it does seem to be that this year people are dragging their feet a little more. So lead flow and people pursuing franchise opportunities has still been really great and continued to increase, but we're seeing the time that it's taking to go through the process really has slowed down, because I think people have kind of dragged their heels a little bit to kind of see what's going on with the economy and the tariffs and everything, and what is that going to look like in the coming months. But I would also the great thing about franchising is there's so many concepts to choose from. So depending on what it is that's being pursued, franchising seems to always be resilient. For example, during COVID, we really saw, pet concepts increase and home restoration. And so if that's something that someone is concerned about, maybe pursuing a brand that seems more resilient in situations like this, or whatever the concern is, find out from the brand how they are preparing for that, or what is their plan in place if they do, for example, export or import product, how are tariffs going to affect them, and just doing your homework and due diligence and making sure you're asking the right questions.
So today, supposedly, we have somewhere in the range of 4,000 different franchise brands, and maybe it's 200 more than that or 200 less than that. It's still a lot of brands. Do you loan for all of those brands?
So we do our own homework internally, but we're not shy of any industries. Now we do on the SBA side, though, have to ensure that they're SBA eligible. And recently the SBA did reincorporate the SBA franchise directory. So if a brand is not on the SBA franchise directory, we are educating them on how they need to get on it if they want their franchisees to be able to access the SBA program. So also walk them through how to do that, though.
So I wanted to talk about the SBA franchise directory because there's been a lot of confusion about that. It was a tool that people could access if they knew how. Then it went away, it seemed entirely. And now apparently, is it officially back now that I could go to SBA and see that franchise directory today?
Well, it is officially back. SBA is requiring that franchise be on it. I believe July 31st is kind of a cutoff of brands that were on the original directory to basically be kind of reinstated. Okay. Now, if they miss that deadline, then they can still apply, but their franchisees may run into some delays. But if you Google SBA franchise directory right now, it is public, free to download on the SBA's website. They are updating it. There's not a specific recurring date that they're updating it, but they're updating it in real time. So they just updated it, for example, a few days ago. So make sure you are pulling from the website when you're reviewing it to ensure you have the most up-to-date version.
Okay. And for people who don't know, why is this directory so special or valuable to me if I want to get into franchising?
So it shows that the SBA has determined that franchise meets the FTC's definition of a franchise, as well as the SBA's eligibility criteria. Now, lenders still do need to kind of do some assessments on their end when they're looking at a brand, even if it's on the directory. But the reason why we think it's great that it's back is it's really going to help make the approval process more efficient. It takes that risk and that responsibility back away from lenders and puts it back on the SBA. So lenders aren't having to work through, the entire FDD, a new franchise agreement to determine eligibility. SBA is doing that for them.
And how does a brand end up off the franchise directory? What did they do wrong, or what did they not do right, or who falls off?
If they made a change to their FDD or their franchise agreement that now makes them not eligible, then SBA can remove them. Or if something is determined during for example, SBA guarantee request by a bank of a loan that's defaulted, and they find something that determines that they're ineligible, they can remove it.
And does the directory track how well or how often, or the percentage of loans that are paid off by franchisees? And at one point, I believe that's why you would go to the franchise directory to see ABC brand has a 98% chance that if you start one of these ABC brands, you become a franchisee and you borrow $500,000. 98% of the time, that loan gets paid back by franchisees. Is that still the case?
The SBA directory does not show that. The franchise registry through Fran Data, which was back in the day before the SBA franchise directory existed, they have, for example, the fund score and some other criteria that lenders can reference through their product.
And that's Fran Data, not SBA, different,
correct.
Not a lender.
Correct. However, the SBA does publicly release their franchise loan data. So you can find that online. It is in a kind of crazy spreadsheet, but there are companies that break it down and organize it onto dashboards and reports and things like that. Lumos is one, Coleman Report does it. So there are companies that you can access that organize and break that information down.
And of course, you know that information. So if I come to you and say, I'm looking at acquiring a franchise of ABC brand, you might tell me that's not a likely opportunity. Lenders are not favoring that one, but here's a competitor, or would you not tell me that?
Typically, whenever a potential franchisee comes to us, they already have their brand in mind. So they've been to Discovery Day, or maybe they need the pre-approval to go to Discovery Day. But as a funding consultant, our role is not, though, to consult them on which brand to pursue. We are instead setting them up funding strategies and ensuring that they have funding in place.
And how popular are food franchises today? We know that they make up about 2/3 of those 4,000 brands, but not everybody wants to invest in a food business. It's a lot of work. Oftentimes the margins aren't as strong. It's difficult to hire people. Has food dropped off in popularity, or is it as strong as it's ever been in 13 years you've been there?
We still do a lot of food. So still very strong. In fact, even during 2020, 2021, we were still doing food and fitness. So we had lenders that still wanted to play in that space. So we're still very heavy in the quick service restaurant space. We do a lot of those. We've done a lot of those so far this year.
Okay. And then what's most popular after food? Let's say service brands or retail brands that they're not selling food or beverage. What are the, not necessarily brand names, but what are the categories where people are investing today?
Yeah, I mean, we, in the IFA's economic outlook that they put out earlier this year, they forecasted that personal service and retail, food products, and services were expected to be the fastest growing industries this year. And we're really seeing that same trend. So beauty, health, fitness, we're seeing a lot of medical brands, mental health, automotive, pet, childcare, sports, recreation. So we're seeing the same trends that they had predicted.
Yeah. So how about if I've never owned a franchise before? Does that raise concern for you and for the lenders? Do you prefer that I've had franchise experience, or I've been a teacher for 30 years, I've not made any money, I'm tired of teaching, I want to be in business for myself, and I've selected this a beauty franchise that I want to invest in? Does that concern you that I don't really have the experience?
Absolutely not. The majority of our clients don't have any franchise experience, may not even have any business ownership experience. And they, just like the example you gave, maybe are tired of working for somebody else and want to have their own schedule and fund their own business. Or they got laid off and they don't want to get back into the corporate world. So what lenders are looking for is not necessarily direct experience, but do they have some kind of relatable experience? And that can be something as you've been in a management role, or maybe you managed a gym when you were, 19 years old or 20, and now you want to open a gym. So it can be something that's not necessarily direct, but some kind of skill set and core competencies that a lender can see on your resume that could make you a good business owner.
Okay. And how about, are you concerned that I'm going to be the first franchisee of this new brand, or even the 10th franchisee of a brand that's only been selling franchises for a couple of years? Is that a red flag?
It's not a red flag, but those are going to be tougher to get done. So we really educate variant emerging brands that they need to have extremely strong franchisees starting out. And that's what lenders are typically requiring as well. So it would be devastating to an emerging brand to have an early franchisee fail. That looks awful in the FTD, and that would be a red flag to a lender. Mm-hmm. So when we're evaluating a startup franchisee or a very emerging brand, we are making sure they're hitting the main qualifiers.
So does the kind of franchisee, first 10 in an emerging brand, do they need to have more money? Is that what essentially you're looking for? Or what is it that you want to make sure that not only do I have it, but maybe there are things you're checking on the franchisor to make sure they're doing their job and not just selling a franchise to somebody who came along, has some money, but probably won't make it for the long term.
Yeah. Absolutely. And we help a lot of brands as kind of their pre-qualification process. So we can do that for them. But we're ultimately ensuring that startup franchisee fulfills all 4 qualifiers. So we kind of think of them as buckets. So if you're pursuing a more established brand, you may be able to get away with 3 out of the 4 buckets, or maybe even 2 out of the 4 buckets. But for a really emerging brand, they need to fill all 4. And those are going to be credit. So typically 680 or better, personal FICO score, good favorable credit history. And then do they have enough money for the down payment on the loan? Do they have enough money then after they pay that down payment to still have some cash reserves to cover their personal life? That's known as post-loan close liquidity. And then also, do they have any type of collateral, whether it's collateral in the business that the lender can take a lien on. And in some instances, they may also look at personal collateral like their home or property.
So some franchisors call you, it's not just lender, or it's not just borrowers who are calling you. Could be the franchisor saying to Fran Fund, help me do a better job of selecting and qualifying franchisees. How much of your time is spent there?
Absolutely. So yeah, we'll spend some time definitely going through if they want to send their franchisees our way. We do a very deep assessment through a lending application that we collect. We use that information. We verify it with the candidate, go through their business plan, their personal financials, and we even do a full credit bureau report to get their personal FICO and even their SBSS score, which is the SBA's credit score. And our goal is to be able to provide a Fran Fund pre-approval letter that candidate can then take back to the brand to go to their meet the team day or discovery day to show that they're qualified for funding.
As a borrower coming to you, and I know that I'm investing in a brand that nobody has heard of because I'm going to be the first franchisee or the 12th franchisee, what are some things that you would tell me to look for in that franchisor to make sure that I'm making as good of a choice or decision as I can make? It would be easier to go to the franchisor who has 800 franchisees. They really got it down, 20 years of experience. They know what they're doing, but I can't buy that brand. It's not available, or whatever it might be. But there is this other brand that's only been around a couple of years, even though they have 20 years of operating their own corporate store. But what can you tell me to look for with that brand to make sure that okay, that this is an okay type of, not just okay type of investment, but you're making a good decision. You've checked the boxes.
So every franchise is required to have a franchise disclosure document required by the FTC. And it is wild to me when you hear how many candidates just aren't reading that document. Outlines so many important things that you should be going through when you are investigating a brand. And I would recommend looking at, specifically in item 1, for example, just understanding really what it is that the brand is selling or what are their services or products. Are there any major licensing requirements that maybe hinder to you being able to move forward with them? Do they have any current pending litigation? Do they have a really heavy litigation past? Do they have any bankruptcy filings? In item 7, there's 23 items in an FDD. In item 7, looking at the initial investment. So what is it going to cost to open one of these? Really understanding the full scope of how much money this is going to entail. And then also looking at the ongoing fees that are going to be incurred, like the royalty fee, for example, or a marketing fee. And then going into item 19, which is the financial performance section. A brand does not have to include something there, but if they do, it's extremely useful to see what the financial performance of that brand looks like. And then item 20, what is their continuity rate? How many outlets have they had open versus closed over the past year or 3 years, if that information is there? All just really great information in that document that needs to be assessed. And then once you sign the FTD, which is not binding, you then have the opportunity to have validation calls with existing franchisees. And that is an amazing opportunity to be able to ask questions that the brand can't necessarily answer. For example, the brand can't answer questions about financial performance if it's not in item 19 of the FTD. Mm-hmm. So instead, if you still have some questions and there's missing information there, go to an existing franchisee. How did you do in your first year? How are you performing now? Does the franchisor give you great great support? Are you happy? So really just doing your due diligence and really making sure that's a brand that you feel good about before you sign anything final.
So I have heard through a source at the IFA that something like 70% of investors don't read the FDD. I don't know if that's true or not, but that's an astounding percentage. And even if it was much smaller, why would people not read the FDD when it's written in plain English? It's not a legalese document. Do you talk to people about who say, oh, no, I didn't read that. Maybe I gave it to my attorney.
We do. And we also explain how it's so important to be used as a guide when they're completing the loan documents, for example. It's what we use whenever we're providing really great guidance about a brand, especially if it's a new brand that we haven't worked for. We'll go through it and make sure we understand it inside and out. So absolutely, opening a business is a great commitment, and it's really important to understand exactly what you're getting into.
How about any other qualities that I should look for? Because particularly if there are no other franchisees, or I'm the third one, but nobody's open and operating, they don't have any experience. So are there things that I should look for outside of, okay, they don't have a bankruptcy, they don't have any lawsuits against them, but can you help me with how do I size up? I'm talking to the salesperson, and nothing wrong with that, but should I be talking to the CEO before I invest in and become an early franchisee?
That is definitely an option. And in the FTD, it does list who their leadership teams are. So who the roles are, the name of the person. And so, yeah, if that gives additional comfort and just want to feel out like who are the people that are in charge of really running the franchisor, definitely.
Yeah. So you're gung-ho about franchise lending. Do you lend if it's not a franchise, or is Fran Fund only for franchise businesses?
We will do non-franchises just because we are at 99% referral-based. Franchises are typically what we get, and that is our bread and butter, but we do non-franchises, and we're successful at that.
Yeah. And of course, just in wrapping up, the Sieber family, Jeff and Sherry Sieber, and Jeff started Fran Fund years back, and Sherry came into business with him. Those are two of the most lovable people in franchising, and funny, humorous, good time. How does that factor into you coming to work at Fran Fund? They're the Siebers.
People ask me all the time when I tell them I've been here 13 years, like, what keeps you at Fran Fund? And it is that, we're a family-owned business. We're a small business ourselves, and it's that family feel. Our CEO, which is Jeff Sieber, and Sherry's our president, they are in the office as much as we are. They walk around. They say hello. They don't hide in their office. You don't have to schedule a specific time to talk to them. We're a very open door company. So they're absolutely wonderful. And our biggest goal, especially with all the growth that we've been experiencing over the past few years, has really been to keep that very tight fit culture that we have. And I think we do a good job doing that.
Plus, everybody knows the Siebers in franchising, and they love the Siebers. And we love them at the Titus Center for lots of reasons, and you as well as one of our advisory board members. But the Siebers gave us $100,000 to fund a scholarship that every year, off the interest that money is generating, we have a $5,000 scholarship that we've been giving to our students. So that's a great benefit for young people who want to study franchising. And one day, one of my graduates may actually end up at Fran Fund and working with you all. There's something about, they think that Fort Worth, Texas is maybe out in the sticks, but it's not, as we know. But maybe not the greatest of destinations for people coming out of college. And again, I don't know why that's the case, because Fort Worth is a great place to be.
It's a great city. I've lived here almost my entire life, so I can't imagine living somewhere else.
Yeah. All right, Shay. Well, thank you for all of this. It's been a real treat talking to you and getting some education about funding. So many people trying to get into franchising today. Can't do it without some money. And you do that with Fran Fund. So thank you.
Thank you, John. It's been a pleasure.
Thanks for tuning in to the Franchise Hot Seat Podcast with Dr. John P. Hayes. Tune in next time for more conversation around all things franchising.